All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. This morning I sold my BABA, and it's unfortunate. Stock, nice. What, $3 higher since where I got in, and down what, $20 on the option by the time I'm out. Never any fun, to be in that scenario, but we've talked about that risk here in the market long enough, and knew that risk was there, and it's pervasive out there in the market. It wasn't just a BABA risk; it's pervasive, out there, and it's one of those things that have to deal with in a market like this, and every market has its challenges or different things and different dynamics. That's one of the big ones in this one. But I decided to take it off here this morning. Nothing directionally here with BABA. Just decided to back on out and live to fight another day, as the time element is really starting to come into play. It's just something where if BABA does have another leg down, I don't have any time to recover, and decided I'm not wanting to take that risk where things are right now, and I'll back on out. And if I get a nice little buy signal, come in on Alibaba again, here on my hourly chart, then I'll go and look to get back into it, but on a different option, one out another week. But you can see even here on the hourly chart, the close yesterday, pushed it down below the 7-hour moving average. Okay, fine. It's kind of been in this spot, every day. But gap on up this morning, wasn't high enough to push it above the 7-hour moving average, on that gap. So I don't look at that gap as extremely bullish. It could ultimately be bullish, and we could ultimately see it close above the 7-hour. But, just decided, okay, I'm going to take it, move on, and that's what I did here with Alibaba. So, we got in back here around 151, 151 and a half, out at 153 and a half-ish. Okay, great. Next, moving on there from that. If I had something out of the money, it would have, we would have seen, the option down a lot more. But I think $20 loss there on it. So I wasn't too aggressive with it. It'll kind of go down as more of a nominal trade. It's not going to move the challenge one way or the other. So that leaves me with cash and then my VXX puts. And, this is just one, we've talked about it. I'm not going anywhere, not doing anything with it. I have the 39 strike, and it'll pay off phenomenally if, the VXX makes that, makes a little bit of move down. And, from a risk reward standpoint, great. And that's what this is. I'm willing to put a little bit of, risk out there, $300 risk for something that has, $1,000 return potential and more, depending on what happens. It does expire tomorrow. And, most times personally, when I'm in these types of trades, I kind of block them on out and I say, all right, I'll see where it is Friday at the close. And I come back to it Friday at the close and either close it out or, let it expire, whichever it is. And that's kind of how I'm looking at VXX. There have been some that have kind of implied market meaning with my VXX trade. I do caution against that, as it has nothing to do with any of my thoughts on the market or other trades or anything else out there. But it is one of those markets where if today, if we see the market kind of just sit at this level, just sit here and not really do a whole lot today. The market traded in a tighter overnight range. Yes, it's had some up and down here this morning. I think in about a 20-point range, in terms of the chop this morning. And you may say, well, that's a lot of chop. That's a lot of, not compared to what we have seen, right? And so it's, it's dampened considerably. And if we see that dampening kind of continue, path of least resistance for VXX will be sharply lower. And it's one where, One where I may hear tomorrow look at setting up some VXX going into next week here as well, as I do think there is a decent chance of some further volatility compression, through the holidays and through some of this time where the market will get a little bit, tired, so to speak there. When I look at the price action this morning, and I go through various things, I don't have a lot of triggers. This gap has not created a whole lot. Most things, kind of look like a Boeing, where there's a gap up, sure, and it's not all that strong, and it's not pushing it back above the 7-hour moving average. A lot of things look like Boeing here this morning. There are some exceptions with the Adobes of the world, which trying to push above the 7-hour, but not convincing. There's not a lot of conviction there with it. You take a look at something like an IBM. Yes, it's bouncing, but not enough to push it back above that 7-hour. So not a lot of short-term buy signals coming in here for me right here on this move this morning. Now, 4 stocks that I want to kind of focus on this morning. Let's go take a look. Target. This one's actually giving a bear signal here this morning. Gap below the 7-hour, pushing below that first 30-minute low, and giving me a little bit of a bear signal here on Target. Now, I'm not a huge fan of where the options are right here. So I'm going to wait here just a moment, on that, and in looking to get into that. But Target a decent bearish signal here on it this morning. Bank of America. This one here is one where, look, the daily's pretty oversold. We came down to almost minus 300 here. It's pretty oversold. You know me, I'm bullish Bank of America. I know they've been upgraded or downgraded. I know that, the analysts are jumping off ship, but take a look at this right here at the lower band on the hourly. We're not pushing above the 7-hour or anything like that, but right coming off this support level right here, I thought, all right, I'm going to go buy some Bank of America. And I went to go get in, look at the options and say, all right, you know what, let's go figure out which one I want to buy. And I looked at next week's at the monies, and they're going for 50 cents. This was when the stock was up like 2 or 3 cents. But these at the monies were going for 50 cents. And I just thought to myself, wow. For Bank of America, that's pretty huge, compared to what they have been historically. So I'm going to give it a little bit of time this morning. It may result in the options ultimately being, more expensive, but from just an overall risk-reward standpoint, it just doesn't make a ton of sense there. I could go deeper in the money and go about it that way, but I decided I'll kind of hold off. I'll wait. J.P. Morgan, it's the same thing. Citigroup, it's the same thing. Within the group itself. So I do like where it sits. I think it's a very interesting spot. It's not a buy signal by any means, right? It's a level buy. It's kind of buying off this bounce level that it's been on. And so with that, it's not something I'd look at and go, okay, it's ready to run. I can look at it at 26 and a half and say, realistically, it's ready to move back into that level. I can't say that. And so I can't look at that option as having tremendous reward potential. So overpaying, without a tremendous reward potential, I'll let it go here a little bit. Then we go to American Express. I talked about this yesterday. This is one of my favorites within the group, and you see it this morning popping above that 7-hour moving average. It's nice action this morning, right? Definitely has better action on it than other things. Here we are though, right at retracement levels of the recent drop, pushing above that seven-day moving average here. This is one where, if it, and I know we're way too early in the morning to say if it closes here, but if it closes around here, I want in. I want in, depending on the rest of the market, but I'm not convinced it closes around here. And when you look at the options, the spreads are fairly sizable. They're not small spreads, so I have to really like it. The implied volatility isn't as bad when it comes to American Express. It's not as bad as Bank of America or some of the other things out there, but it's made up for with the spread. Here on the stock. So, it's one where I'd be willing to get in. I'd prefer the 28th of December options here, and the spreads will come in as the day progresses here. But basically, I need a $4 move to double my money. All right, that's 112. Can I get there? Yeah, sure could. Am I feeling that bullish? No, not really. So I'll give it a little more time, but that's one that is triggering here for me this morning. And then again on the downside, American Airlines, bearish trigger here today. It's had a little bit of a 3-day rally. You see it blowing through the lows of the prior 2 days. Classic kind of bearish reversal here, or bearish trend with a small low volume bounce that gets sold into, and that's what we're seeing on American Airlines this morning. The hourly chart, you can see what that looks like right here as it's extending. It's getting a little bit into some of the oversold territory. But, if this is able to bounce up a little bit here today, maybe something worth going after on the put side as we go forward here and looking for the $30 level to come back into play, and that's what I'm looking for. But this is much more of a daily chart move, so I'm going to, give it a little time. But you look at United Airlines, same type of action today. You look at Delta, worse action today. You look at Alaska Airlines, this has just been in free fall here over the last week and a half. And so there's some very, very ugly action going on within this group, within this sector. And, American giving that downside trigger here today. And so we'll be looking at grabbing some puts here on it, throughout the course of the day. If you look at the option values on American, let me pull them up here. You can see that, the 28th of December, the 33s are going for about $1. So a move down to 30, they'd be worth about $3, right? And that's kind of what I'm looking for, is a move down, retest of 30. And, so it's a pretty good risk reward here on it. And something that, we get a little bit of a morning. I think the overall group will get a little bit of a bounce here this morning, and I'll be looking to buy those puts into the bounce. So those are some of the things I'm looking at this morning. I mentioned in my note that AT&T was on my radar, but I don't have the price action I want to see to get in. It's one that I'm looking to the upside, down here around 30, want to look to get in. Yesterday, gapped above the 7-hour, kind of sat there all day. If it was able to open up around 30.25, 30.30, I was going to look to get in, but didn't, breaking back below 30, so back below the 7-hour, so something that not ready to jump into just yet. So anyway, those are on my radar this morning. I don't think there's anything in terms of the market that's game changing this morning where we can say, well, now the Bulls have a big advantage or now the Bears have more of an advantage. If you look at the sectoral breakdowns this morning, it's you can say, well, there's money going into consumer staples. They were early leader. Utilities an early leader. These conservative sectors led early on this morning. But so did tech. And tech's performing about the same. But small caps lagging here today. And, this is one where there was a small lead on small caps yesterday, but didn't mean a whole lot, in the context of things. We've talked about how much the IWM continues to lag the SPY. In fact, I'll show it to you here on the performance. And this is one that, that you look at, and it's strongly controlled by the Bears, where you have the IWM down 4.3% in the last 30 days. The SPY down 2%. When small caps are underperforming large caps by more than 2%, that is squarely in the bear territory, and you're not talking oversold until you get about a 5 to 7% underperformance, and we're nowhere close to that. Earlier this week, we talked about this dynamic. It's still in play, but what's really interesting is, the opposite dynamic with the emerging markets and the FXI, so the EEM and China ETFs, which is a pretty historic dynamic shift here. But anyway, nothing's really changing in all of that here today that you can look at and go, wow, that's different. That's game changing. We see consumer discretionary getting sold off as Amazon starts to reverse and go red here. We're starting to see some of the tech names reverse and go red. Micron opened higher and has a reversal on it. One thing to keep in mind, especially if you're strongly bearish, the volumes on the upside in things like Micron over the last couple days has been negligible. It's been very, very small, and that's the type of volume rally or low volume rally that tends to get sold into. And, so some of the reversals that we're seeing so far today, if they hold, become some pretty interesting risk-reward points where you can, short Micron here with the stop on the high from today or from this morning, and you have a decent risk-reward, getting in short with some of these names. So for the challenge, I'm out of BABA. I'm holding my VXX, and I will look to, get into one of these plays here as the day progresses. I do want to give it just a little bit more time here this morning for some things to chop around, as I do think chop risk today is the main theme. I hate saying something like this because it always gets misinterpreted, but I don't expect a monster trend to come into this market today. I don't expect that it's a massive sell day. I don't expect that it's a massive buy day without some sort of news catalyst coming in. Right? If a news catalyst comes in, that's changing. But as things sit, as the dynamics sit right now, I expect today to be much more of a compression day where, we see the market chop in between some of its ranges that it has set so far this morning. And, that's my expectation. Now, if we see things change outside of that, I'll have a closer look at a few things and whatnot. But we have an interesting mix of bullish and bearish, dynamics here. And one that, you're really bearish. You want to go play a Micron. You want to go play a Target, American Airlines. They're out there. You're bullish. You want to bottom pick here. The Bank of Americas of the world. They're there. And even as I'm talking, we see this bump up in the market right here of about 6 points. That's being led by the banks. You look at what's moving, what's going up. Tech's not. Tech is coming off of its highs. The banks are getting bought here on this move, which, they were the laggards here this morning. So to me, suggests much more of a compression type of a day. And, that's kind of one of those types of days where I don't really want to be heavily exposed in terms of options until later on in the day here. So thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.